Good day, traders. It's Thursday, October 26th. This is Alan Hong, market analyst of GKFXPrime. So we're gonna share my daily analysis through this video. And first of all, let's review the major market movements. So first instruments we're referring here is the dollar index info hourly chart. So the US dollar index was fell against a basket of major currencies on Tuesday, down 0.29% to 93.56 after data showing the new home sales, which was hit a nearly 10-year high, was offset by strong gains in sterling amid bullish UK economic growth. So the Commerce Department said on Wednesday the non-defense capital goods orders, excluding aircraft, a closely watched proxy for business spending plans, was rose 1.3% last month, which beating the forecast of a 1% increase. So in a separate report, the Commerce Department showed existing home sales increase was 18.9% in September from the previous month to a seasonally adjusted annual rate of 667,000 units. So economists were expecting a 0.9% decline to 555,000 homes. And also supporting the sentiment on the dollar was growing expectations that the last Dulwich Farris of China would be appointed amid several reports suggesting that Stanford University economist John Taylor impressed US President Donald Trump in his interview to lead the Federal Reserve. So Taylor favors a rule-based approach to monetary policy, which given the current level of both inflation and economic growth implies that rates should be higher than they are now. Well, it's still linked, right? So the prospect of more hawkish Federal Reserve and bullish economic data was failed to help the dollar shake off losses against the still linked and the euro. So the parent GBP USD was rose 0.94% to traded around 1.3256, following better than expected economic growth data. The single currency was also rose higher on Tuesdays, with EUR-USD pair up 0.46% to traded around 1.1818 as investors look ahead to European Central Bank's decisions on interest rates late for Thursday. As for the Canadian dollar, it was up 1% to 1.2802 against the dollars on Tuesdays after the Bank of Canada kept interest rates unchanged on Wednesday. On Thursday in Asia, the dollar held weaker against the Japanese yen, with USD JPY pair change hands at 113.41, down 0.3% as investors look ahead to an announcement on the new Federal Reserve chief by President Donald Trump possibly this week. Having a tap in commodities markets, gold prices edged up in Asia on Thursday, edged up 0.11% to traded around $1,280.39 a troy ounce as the dollar trended weaker and physical demand supported the sentiment. So overnight, gold prices were roughly unchanged on Wednesday as the dollar came under pressure despite bullish economic reports pointing to underlying strength in the US economy. So bullish durable goods order and housing data failed to spark a recovery in the dollar, which lifting the gold prices off session lows as the precious metal attempted to sneak a 3-day losing streak. So despite the recovery from session lows, gold prices remain under pressure amid reports that Stanford University economist John Taylor and economists with a less knowledge outlook than the Federal Reserve Chair Janet Yellen, who was leading the race to notch the Federal Reserve top post. So gold price is sensitive to move higher in both bond yields and the US dollars. A stronger dollar makes gold more expensive for holders for foreign currencies, while a rise in the US rate so leave the opportunity cost of holding non-yielding assets such as bullion. As for the oil price, it was extended declines on Thursday, down 2 cents at $52.16 a barrel after government data show a surprise climb in US crude inventories. So according to the US Energy Information Administration's data show on Wednesdays, US crude inventories was rose by 856,000 barrels last week, and analysts had expected a decrease of 2.6 million barrels. So now we're gonna review the highlighted economic data that released on the Wednesday, alright, which is overnight, as well as today focused economic data and events. So Wednesday, Australia has released its consumer price index for the third quarter, which referred as inflation. So it showed a result of 0.6%, which is slightly disappointed when comparing to the focus of economies at 0.8%. Sorry, right. So during European trading hours, the German has released its IFO Business Climate Index for October, which show a 116.7, which is higher than the expectations, right? And besides of the Germans, the United Kingdom has released its gross domestic product for third quarter and was grow better than previous with 1.5%, right? So during the North American trading hours, the United States has released a series of data, including the core durable goods orders and new home sales, right, which topped the expectations. Alright. So as for Canada's side, it was kept the interest rates unchanged at 1% on yesterday during United States trading hours. Okay, and the last data on yesterday is the crude oil inventories. So we show the build of 0.856 millions, right? So which is considered negative to the crude oil price. So as for today, we got a series of data that will be released by the European Union as well as the United States. Alright, so European Central Bank is due to decide its interest rates for October today, and which expected to be remain the same at 0%. So during North American trading hours, United States is going to release its weekly employment data, the initial jobless claim, which expected to grow from previous 222,000 to 235,000. So higher than the previous data, higher than the previous result is considered positive. Considered negative to the United States dollar. Otherwise, we consider positive to the United States dollar. Alright, so the last data tonight is the pending home sales from the United States as well. Alright, so the data is for September, and which focus to grow from previous negative territory of negative 2.6% to 0.2%. So now it's technical analysis sessions. First instruments referring to the Great British Pound against the US dollar pair in for hourly charts. So the prospect of a more hawkish various and bullish economic data was failed to help the dollar shake off losses against the stalemate. So with the pair GBP/USD stronger following better than expected economic growth data on Tuesday, which traded near to the resistance level at 1.327. So closing above this level will signaling for further retracement, but remain the downtrend structures. So only with another closure above the Fibonacci retracement level of 50 at 1.335, this suggests for shifting trend direction to become uptrends. Then it could surge further towards the next resistance level at 1.341. On the downside, we could see a signal of continuations of downtrends with a closure below the previous low at 1.302. The single currency was rose higher on Tuesday as investors look ahead to European Central Bank's decisions on interest rate slate for Thursday. So the pair currently traded near to the resistance level of 1.183, but remain its downtrend structures. So referring to the MACD indicator, both movement lines were pointing upward, but the momentum is weakened, so suggesting to be traded ranging between 1.175 and 1.183 in short terms. And only with a closure below the previous low at 1.166 will open up a door for continuations of downtrend and could fall further towards the next support level at 1.16. So on the upsides, we could refer 1.188 at its trend direction shifting freehold. So referring to the USD-JPY-Prime, the dollar was held weaker against the yen on Thursday, with as investors look ahead to the announcements on the new various of shift by President Donald Trump, possibly this week. So the pair traded near the resistance level of 113.6 but failed to closing above this level, will lead to further retracement and could fall towards the next support level at 113.3. But however, the both moving average line in 4-hourly charts is remain expanding upwards, which suggesting to remains the uptrend structures. Thus we could looking forward for closure above the previous high at 114.3, which will provide a signal for continuation of uptrends, and the next resistance level can be seen at 116. As for commodities, gold prices edged up in Asia on Thursday as the dollar trended vehicle and physical demand supported the sentiments. So looking into 4-hourly charts, gold price actually traded a tad below the resistance level of $1,283, with remaining its downtrend structures. Thus, we could looking forward for closure below the previous low at $1,260, which was suggesting for continuations of downtrends and could fall further towards the next support level at $1,237 a troy ounce. And on the upside, the first resistance level comes in at $1,283 a troy ounce. And oil price was extended declines on Thursday after government data show a surprise climb in US crude inventories. So with the US West Texas Intermediate crude price currently traded at $52 barrels freehold and closing above $52.90 will open up a door for continuations of uptrends and could surge further towards the next resistance level at $53.70. As for the downside, the nearest support levels can be seen at $51.20 a barrel. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the MY-GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.